Hello guys, and welcome to my YouTube channel once again. All right, so in today's video I want to do an analysis on this particular pair to see if I can get an entry for some profitable trades. All right, this is volatility 101s index, and I am on the daily time frame. I want to do a top down analysis, so watch this video to the end so you can learn how I analyze the market to get high probability trade setups that give me good profit. All right, so first of all, from what I can see here, or we can see on the screen, you can see the market created a double top here. I think that was my last video or so, I talked about the double top. You can see the power of the double top. So the market formed this and it started selling nicely. There was a neckline here which was broken, and the market dropped and then retested nicely. You can see there was a retest here on this neckline. All right, so as it is, the market sold and got to this level, bought up to this level, pulled back. Then from here we can see there seems to be a kind of a bullish move in the market, because after the market sold to this level, mind you, there was a high here. When the market sold to this level, it created a high, it bought and created a high, then sold, then it created another high here. You see now, so you're having a higher high and there's a higher low. So now there's another high which is higher than this previous high, and we know what happens when we see this kind of situations in the market, or structures. So we just have to join these highs, these higher lows, then also try to see if we can join these higher highs. All right, because this tells us the market will be selling much later. That's what it's trying to tell us, that the market will be selling much later. And from my understanding and my expectation, I think the market might want to get to this zone, because this is actually a and I think this is another block formation or a supply zone. So I think the market will get to this zone first before selling nicely to the downside. All right, so from what we have here now, we can expect the market to maybe sell to a downside a bit, then continue buying. Meanwhile, this is just a daily time frame. Actually, this is just a daily time frame, and I would like to go down to the 4 hourly time frame to see what the market has done. And also, you'll notice that there is a resistance zone somewhere here. Before we go to the 4 hourly time frame, there's a resistance zone somewhere here. All right, there's a resistance zone somewhere here which the market has been reacting to. You can see for the about how many times the market has been rejecting this zone. After the market sold with this bearish candlestick, it has been rejecting this zone, then bought back to this same zone. There's the rejection here, bought back to the same zone. It's the rejection, and today's candlestick has been selling. Yeah, all right. So now, if the market breaks and closes above this zone, so we expect the market to target this zone, then sell back nicely. And this will be a concept in smart money concept. They call how do they call it? Actually, this is liquidity around here, so the market might just buy, do this thing they call, is it liquidity grab or whatever, then it sells nicely to the downside, which is in line with the structure we have. Because with this structure, the market creating higher highs and higher lows in a bearish market indicates that the market will be breaking down to the downside. All right, okay, so meanwhile, let's go down to a lower time frame to find some little opportunities that will be inside it, because if we want to really wait for the market to give us these massive sales, then might take some days. All right, so let's go down to the 4 hourly time frame to see what the market is doing. All right, great. See, on the lower time frame, which is the 4 hourly time frame right here, you can see the market is reacting to another zone right there. The market is reacting to another zone right there. You can see we had some rejections around this place. Let me just mark it out. You can see rejections here, and the market sold to that level, and then it's trying to reject too. So market has not been able to break below this zone for a while. Like you can see these rejections here. If I zoom in a bit, you can see market has been rejecting this zone, sold back, then bought, so it is back at this zone. So there is a chance the market that can decide to buy from this zone back to this zone to create a kind of a double top, then sells to the downside before it buys to continue, before it buys to the top to meet where we expect on a higher time frame, what we saw on the daily time frame. So the market might want to do something like this, from here, then it will buy massively to that zone we saw on the daily time frame. All right, so something like this can possibly happen. Meanwhile, let's look at what we have currently. So the market is actually on this zone, And on this zone, we have to also confirm that this zone is a strong zone. As you can see, market has been reacting to this zone previously. The zone the market is buying has been buying and selling from. You can see the previous activities of the market along this same zone. You can see market bought from this zone here. Let me try to zoom in a bit. Let me try to zoom in. Okay, so you can see that market bought from this zone, market sold from this zone, sold from this zone. All right, market sold again from this same zone now, and market tried to sell again and also bought from this same zone. You can see. All right, so now the market is back at the zone. All right, so the market is back at the zone now. So we expect the market to react again, give us an idea if it wants to buy or sell. If the market can break and close below this zone, then we are expecting some sales. But if it does not, then on a lower time frame, you notice some structures that indicate it's going to buy, then we should expect the market to buy back to this zone. Then we look for opportunities to sell. All right, because it might be forming a double top, or if it gets to this zone without no sign of rejection, then you should expect the market to want to continue buying. All right, because if it's able to break above this zone, we are expecting the market to target the higher time frame supply zone we marked. All right, so let's go down to the 1 hourly time frame. Let's go to the 1 hourly time frame. All right, so on the 1 hourly time frame, the structure we have here doesn't look too smooth, though it wants to indicate a kind of an impulsive correction. But this kind of impulsive correction is the one is similar to the ones the market can easily trick you to believe it's going to start buying at some point, but later you see it selling. But what I will advise is, if you notice this kind of a situation in the market, all you have to do is to be sure, just kind of wait for the market to completely give you a good confirmation before you think of entering a trade. Understand? Because right now, if I want to join my lower highs, I'll be having something like this. If I want to join my lower highs, from the wicks of the candlestick, you confirm that the market has been creating lower highs and lower lows on a lower time frame, like the 15 minutes time frame. That's what the market has been doing. All right. And also, if we look at what is happening here, if we look at this, let me take this one out first. Let's just try to put this line and see if we can understand this thing very clearly, because we want to be sure we are going to make some good profit from this particular analysis. All right, so you can see how many touches we have on this trend line. Guys, this is very perfect. You can see the trend line fits in and touches all the about more than 4 points. Like this is the first one here, this is the second one, third one, fourth touch, and then this is the fifth touch. The fifth touch is where the market currently is, where the current candle is. All right, so from this point the market can still reverse. Then if the market will reverse from this zone, then it might be coming up here to create a head and shoulders pattern, because from this 1 hourly time frame, what we see on here is a kind of the market trying to create a head and shoulders pattern. Like this looks like a possible left shoulder, and then the whole of this is going to be the head. Then the market will be buying to create a right shoulder, and also we are seeing something that looks like an impulsive correction here. So if we duplicate this line and place it on this other side, let's say that's the proper place to put it, then one moment, let me take this up. All right, so we go to the 15 minutes time frame. Let's look at that structure. Guys, this is perfect. It's actually an impulsive correction, so we expect some buys in the market at this point. We're expecting some buys. All right, so all we have to do is to wait, and you can see the rejections here on this 15 minutes time frame. You can see the rejections from this zone. This really shows that the market will want to buy from this zone. All right, so to be on a safer side, guys, it's not as if you can't enter a trade at this point. You can enter a trade at this point right here, maybe with the minimum loss size, which is 0. I think 0.2. Then your stop loss will be, you can just put it down here. Then your TP should be somewhere around here. But understand that the market will want to sell back to after coming up to form the head and shoulders pattern. The market will really want to come back to sell and go below that zone. So all you need to do is just to watch out how this plays out, just to watch how this plays out. All right, so you can see the structure is very simple. You can see the analysis. It's a very simple analysis. You don't need to just stress yourself too much with so many things. All right. So as you can see from the daily time frame, we can see that the market is bullish. Like the current structure of the market is bullish, which indicates the market is going to be selling to the downside after breaking out. Then also from what we can see, there is a supply zone here. I don't know if they call this other block. I think it should be a supply zone, whatever it is, but market will react here. Market will react. So we expect the market to, after the market is able to break above this zone, we want to see the market buying up to this zone, then selling massively. But before then, we expect the market to sell from here to this, where we have this trend line. Then the market is going to buy up to this zone. It's very simple. So what I'll actually be doing now is I'll either just wait for the market, because there are things that are in after an analysis. There's how you will be after there's how you just this, but at the end you don't even know where to enter the trade, because after doing the top down analysis up to the 15 minutes time frame, then you base your analysis on the 15 minutes time frame. Sometimes you might just forget the overall structure of the market, what you saw. You understand? And you may end up confusing yourself on what to do. So if you want to follow this analysis, you can just decide to stay on let me see the 1 hourly time frame. You can decide to stay on the 1 hourly time frame to get confirmations there before you take a buy, if you want to do so. Or you wait for the market to buy to this zone here. You wait for the market to buy to this zone here before you think of taking a sell. All right, so you can wait for the market to buy to this zone before you think of getting a sell, or you wait for the market to break below this zone before you think of taking a sell. But also understand that the where you should be targeting is this trend line here, this particular trend line right here. So if you can be patient enough to allow the market to break this trend line and then sell down to this zone, you'll be making so much profit, guys. And also, if you can just enter the trade at this particular zone, then you enter the trade and allow it to run down to this level here, you'll be making so much profit too, guys. So it's as simple as that. But if you go down to the 15 minutes time frame to take the trade, know that the buys may not be for a long time based on the impulsive correction we have here on that 15 minutes time frame. So you just take your trade, get to somewhere around here, take your profit and run away from the market. All right, then you wait for another opportunity to enter the sales. This setup you are seeing is going to vomit massive profit if you follow it accordingly. It's not difficult. It's very simple, guys. It's very simple. You can do this on all the pace, and you don't need to be greedy. Like I've shown you guys, the market can sell. I'm expecting the market to sell on breaking out. I'm expecting the market to sell from here to here. Now, it is not compulsory that you need to hold your trade from here to here. If you have a target, daily target, just get your target and leave. You understand? So even if you are targeting maybe $10 in a day and you have a setup that can give you $100, guys, take the $10 and run away. Don't be greedy, especially now that you are practicing a strategy and you are trying to discipline yourself. You're learning discipline. Don't allow the market to trick you into trying to make all the money in one day, because the same way it gives you that courage to make the money, to stay on the trade, to make all those, that's the same way it will wipe all the profits you've made for trying to be greedy. All right, so if you have a target of, let's say, I was supposed to tell you guys this. If you have a target of, let's say, maybe $10 per day as your profit, daily profit, look for a setup that can give you $30, $30 to $50. Yeah, look for a setup that can give you $30 to $50 based on that lot size and your account size. You understand? Once you get such a setup, then the market gives you you enter a trade, you get $10, you step out. Don't look for, if you want to make $10 a day, don't look for a setup that gives you $10, because the market might disappoint you. So it's a very simple idea, very simple idea. Just try to follow it. You see, you'll be profitable in the long run. You can do this on any pair: boom, boom, and crash, volatilities, step index, jump indices, even on currency pairs. All right. So if you want to learn and understand how to draw these lines the same way I've done, because these lines, this is our analysis, and our decision is dependent on this line. So you want to know how to draw these lines perfectly well, then you need to enroll in a one-on-one mentorship with me. Just there is a link in the description of this video. You click and you get to my Telegram channel. From there, you can reach out to me for a one-on-one mentorship. All right, you find my direct contacts there. Reach out to me, so I'll take time to teach you how to mark these zones. You mark out these zones, mark out the resistance zones, the order block, and and the supply zones, how to draw perfect trend lines that will help you increase the chance of making profit from the market. It's not about how long you've been in the market, it's how profitable you've been. Some people will tell me, I've been here for more than 5 years, more than 3 years, more than 2 years. How profitable have you been? You understand? So come and get the knowledge that will help you change the way you see the chart. I will change the way you see the chart. I'll change the way you approach the market, and it's going to be profitable for you at the end. And you'll be testifying. I'll be sharing your results in the screen, screenshot of your results in my Telegram channel, like I do for others. All right. So you click on the subscribe button if you've not subscribed to this video yet. Like this video, share your thoughts in the comment section, and I'll see you guys in my next video. Stay blessed and peace out.